Hello everyone, Jesse Webb, TradersPro. Current market conditions still bearish in a bear market. We saw a real nice move on S&P 500 yesterday. We'll take a look at that chart. Our rank here still at negative 5.35. Remember that is this line right here, where so we are finding support, trending higher over the overall uptrend and bear market move. We've been in momentum down in this bearish location. As I mentioned, within the last couple of days, markets need to find support right here. S&P made an attempt today, yesterday. So we'll see if we get any follow through on that support. So we're getting an attempt at a bounce. Breadth and momentum. Breadth is stabilizing here and kind of ticked up a little bit yesterday, which is interesting. So we'll see if we are finding some support in breadth as well. That's just meaning that more and more stocks are starting to stabilize and potentially starting to reverse. Sentiment hasn't budged. It's still sitting up in that upper range, which is fine. Buy-sell ratios, we are seeing just kind of that settling. I've mentioned this before. Typically, I would expect something like this, where we either pause along here, or something more like this, where we get a reversal and then a bigger move lower. But it's been interesting here. We'll see if we get, you can see the height on those, the intensity of those. What we should see is a reversal. We should see, just like we saw back here in this downtrend, these spikes on red. We should now, if the trend is reversing, is start to see these spikes on green and lower on red, which is just a little bull market rally now. So that's kind of the question: is have we shifted or are working to shift into this bull market, and that these moves are now pullbacks? Because that's what we want to be able to watch for, is when do we start becoming dip buyers again instead of rip sellers, okay? Where this uptrend has been moving higher in the last year is just an opportunity to sell. So are we looking now at an opportunity to be buying on these pullbacks? That's kind of what we're working through in the next week or two. I think it'll be interesting to see. S&P 500 really needs to get going here, but you can see that was a pretty solid bar right here. This was yesterday, a gap lower, and then it traded all the way higher, and it took out really at least a couple of days of price action. If we could get another day or two and get back up to here and take out some of this indecisiveness, that may create remove some of the uncertainty and add more buyers into this mix right here. So this is kind of a critical location right here. If we run into some resistance and then things start to roll over again, then we're probably going to retest these lows, if not the October lows. And that I think we're all burnt out on this trend currently. Let's like to see things roll back up to the upside, but nonetheless, we get what we get. Okay, the muscle stocks group. New buy list. This is actually a nice little chart pattern. This is a stock, GOTU, that I wish it hadn't have gone 26% yesterday. That's a big move, but it's a big move to set up a risk profile, because I don't want to buy it here and then have 26% as my stop. I'd rather have a little tighter stop than that, but this still it's a long counter trend pattern, and it may be working on a breakout right here. And at $4 and in in a business technology, and it's been moving higher, and it's got relatively good fundamentals, maybe one to keep an eye on today to see if it breaks out and continues even higher. And the next couple here, this is a medical service stock. Let me switch back to signals. A new buy on that. Nice looking uptrend. TAL, which is a consumer discretionary school education type stock. Also a nice profile here, where it's got an uptrend, pretty deep retracement all the way back to retest. Now it's finding some support, and now confirmation bar right here. That's a good looking chart pattern. Keep an eye on TAL today. And CEIX, not a fantastic pattern, as I mentioned before. What I prefer in the longer term chart is not this. I'd like to see it do this, then chop, and then have confirmation moving higher this way. But this stock, if you pull it out to a 1 year chart instead of 6 months, kind of has that same idea now, to where and this one's had quite a few false breakouts, and this is a coal stock, I believe. Yeah, energy. So an uptrend, just that's a lot of stress. It's a pain right there to ride those out. There's no reason to be in a stock that's doing that. So not a fantastic chart pattern on that. Some of the others may be a little bit better. Here's another good one, glass. Glass products, interesting. It's a nice looking chart pattern, potentially with a breakout trade. Lower left to upper right pattern, a long consolidation and a confirmation bar allows you to set your stop loss here and watch for some continuation. Again, these are position type trades, even swing trades. The average signal time frame from a sell to a hold on this, so if I went sell to a buy, then that's still in that overall uptrend. But a lot of times you'll get a hold to a buy, which sets up for a nice trade as well. So these hold, if you go buy, if you just focus on the green, it's probably a swing trade. If you're focusing on the entire signal system from a sell to a buy, then back to a sell again, those give about 3 signals a year. You're probably going to get double that by going just from hold to hold. So for example, you go from a yellow to green to a yellow, and that's your signal. It's going to be a lot shorter, and you're going to be able to capture that trend essentially as a swing type trader, where you'd have an exit here and enter here. A couple of ideas for you for entry. You don't have to do it all the same way. These shorter term trends, just focusing on those green signals and an overall uptrend. If you don't have full access to the site and software, you can upgrade with one of the links below, and we look forward to having you. Have a great day today.